Good morning, guys and girls, and welcome to this morning's video. So this morning I have three pairs on watch, and those are pound Kiwi, dollar CAD, and euro dollar. So my favorite of the bunch this morning is pound Kiwi, and I'm going to break that down for you now. So on the higher time frames, as I'm seeing it, we have this standout high here, which is visible on all time frames, I believe. And you can see that we broke above it and then broke back to the downside with this very bearish weekly close. I'm not surprised that we're pulling back a bit deeply because we did have a bit of a wick below this weekly candle, which is what I was expecting, a bit of a pullback. But we broke above here, caught people the wrong side of the market, and then we appeared to be moving to the downside. And we also got there by way of this three-touch reversal structure with the middle section, okay? So I'm not surprised what's happening at the minute. If we just zoom down, you can see very bearish sentiment. We did have a bit of a wick here. I think that was something to do with the Japanese stock market crash, or so-called crash. But we have this candle here, which wicks all the way back above here, and then wicks all the way back below, suggesting another washout of orders. And that, given that we closed back below here, gives me an indication that we may be seeing a move to the downside to take out this low, which this low near missed too, because you've got to remember that if anybody was buying here, where would they have likely had their stop losses? Perhaps just below here. So price will naturally gravitate back towards that area, especially if we've just seen that washout candle there, which has closed back below the area of value. Okay, if I just zoom down, you can see this is not so clear on the 4 hour, so I'm just going to zoom down to yes, we've got a bit of momentum there, but notice that we're closing back beneath these candles here. Okay, this is a bit clearer on the 1 hour chart, but you can see here that we have this. If we just look at this, we have the move to the downside, so we tap into this high by way of an expanding pattern with a tight consolidation there. This structure here, that just looks like a volatility candle, no doubt caused by news. Okay, we have the correction there. Price comes to the downside, it leaves a footprint after it breaks that low. Price comes all the way back up, washes out, taps into that footprint, and then moves to the downside. Okay, just separating these structures. So we have that washout candle here. This is visible on the daily chart as well. We tap into the area, we move to the downside aggressively. Price comes up, leaves a footprint. We now have, after this kind of scoop pattern there, we have this structure. The high of the structure is there. We wick above it, and that's given me a clue that this was a washout of orders, and we're just collecting perhaps a few more here for a further continuation to the downside, because we don't really need to move. If we're moving to the upside, what do we really need to move up to the upside for? We've tapped into that high. We've tapped into this high as well, which was the retest at the back end of that. So if we've tapped into all of that, and we've tapped into the retest at the back end of that, then what are we moving to the upside for? It's the question I ask myself. So with all of that in mind, what I'll be looking for today is the following. I'll be looking for a break back below this area of value, okay, followed by a 5-minute continuation or a 15-minute continuation, and then depending on which one we get, I'll be looking to get short on the break or within it, okay, and that kind of makes contextual sense as well, because we have this 1, 2, 3 leading down to there. So if price was going to form something more complex, it may do so down here, because we have that 1, 2, 3. But personally, I don't think that holds much weight by that point. But I do think that if we do blast through here, we might see some deeper corrections that I don't want to sit through. Okay, so what I'd be doing in this instance is I would measure from this range here. So from this area there, and then the 90% area is often where we pull back deep, which just so happens to be where that low is, okay, relative to the low of this structure here. Okay, so I would set a take profit at that low, and I would trail my stop loss accordingly, just for a potential short-term move for something in the region of 5%. Of course, if the stop loss was wider and I couldn't get the minimum of 5%, then I would just trail my stop loss, okay, because 5% is the minimum requirement for me to be able to use this mechanical management system. So that's what I'm going to be looking for on pound Kiwi. Okay, so next up is, just save that quickly, next up is dollar CAD, Okay, so this I think is a little less likely to be ready by the end of the day, but we shall see. So we have this high here. Okay, we near miss to it. These near misses often get filled, and the clue that we likely would come back to this area was here really for me, because we pulled back very, very sharply, started to sell off, and then we had a near miss to that area. So then we have another near miss to the area. Then we tap into it by way of, once again, a reversal structure. We have the middle section there. We tap into the area. We break above, catch people on the wrong side of the market, and then we have this very bearish. Just get rid of that a second. Oops, what's going on here? Right, there we go. We have this very bearish sentiment to the downside there. Nice follow through, wicked above, washed out all the orders, moved to the downside. It's a very similar story as with pound Kiwi to some extent. You can see once again, you can see the base of this structure here that we kind of near missed to, with this consolidation here, which was almost the retest of the back end of that. Okay, and you can see that when price broke below all of this consolidation, what did it do? It broke through it, it left the footprint. What's price likely doing? Well, with a 4-hour candle like that, it's likely coming back up to here to tap into the liquidity, to then move to the downside to take out this low, which this you notice we have a near miss here to this low and a near miss here to that low. If it does tap into that area of value, it will likely find its way down to there, because there will be stop orders from the people who started buying here. They'd have their stop losses below these lows. If you were to buy here, you might have your stop loss below here or below here. Okay, so price will gravitate towards where that liquidity is. You can see that it's moving up quite correctively here, moving up quite correctively at the moment, but one candle can negate all of that. Now, potentially, this is a completed structure. Okay, so we do have this. Okay, where we have the middle section in there. Okay, price comes down, leaves a footprint, which this near misses to. However, if you notice here, we've actually narrowly near missed to this high, and not only that, this high actually narrowly missed the retest of the back end of that. So that's given me a clue that potentially, with all of these near misses, so if we were to come up to the start of this structure, then by that point it's highly likely that we'd come up to here, because this high near missed to that, and because this didn't quite retest the back end of that. So with all of that in mind, okay, what I'll be looking for from this pair, and you also have to remember that stands out on the weekly, on the 1 hour chart rather, and on the 4 hour chart, whereas that little consolidation I showed you there doesn't. Okay, so the higher time frames always hold more weight, or the higher the time frame. Okay, so what I'm looking for in this instance, what's happening here? What I'm looking for in this instance is once again the same thing. Tap into that area, followed by a 1 hour impulse down, followed and a 5-minute continuation or a 15-minute continuation, and then I would look to get short on the breaker within it. And in this instance, I would be targeting this low where the mechanical management take profit is, because I can't get 5% to that low. So that's what I was talking about a minute ago on pound Kiwi. So I'd set the take profit there. I'll trail my stop loss accordingly, and that's what I'm going to be looking for from dollar CAD. Okay, so I've got the alert set there to see if we can push up to the area. Euro dollar. Okay, euro dollar is third on the list. So euro dollar, you can see we have this consolidation here, which this high near misses to. We have a near miss to that high, and then we wash out all of these highs. Okay, we didn't break above this by a significant amount, but I'm not bothered about that, because we did wick above that by a significant amount, and we near missed to that. Okay, so there's enough of a washout there to suggest a move to the downside, in my experience, especially when we have this. Okay, we have the 1, 2, 3, wash out all that liquidity, and now if we just zoom down, okay, this one's a little bit, you have to be a bit careful with this one, and I shall explain why in a minute. Okay, so potentially this could be a move to the upside, and I shall explain why. If we just zoom in, you can see we're still at this moment in time trading above here, and there's a potential buy setup at play here. This is more, you have to go down to the 5-minute to see this. Now, see this hook here, that could act as the base of a potential bull flag, which does something like this, okay? So we could see something like that, where we get something like that, tap into that, and then start moving to the upside, especially when this sharp move here is the retest of the back end of all of this volume. And often when we come down and you get a little bit of a kind of near miss here, often what you get is a move down like that. You then get the middle section, and then that becomes like the 1, 2, 3 into that area, which then provides the buy opportunity, okay? As I said, especially when it's the retest of the back end of a previous structure. Okay, so we have to be a bit careful. So what negates that? Well, quite simply, what negates that is the following. So if this is going to be a base for a bull flag, a bull structure, okay, we would likely respond from it aggressively, okay? So if we don't, we literally break below that what I've got marked up as an area of interest there, and we consolidate afterwards. That's usually the market's suggesting that it didn't find enough liquidity at this low, which is the retest of the back end of that, to move it to the upside, and the consolidation is the confirmation of that, and basically the bigger players stacking their orders for the next wave to the downside. So I would be interested in the long, but that structure which I drew on wouldn't be ready by the end of the day, and this is a daily forecast. So all I'm looking for, quite simply, is a break below here, and when we're retesting, when a tight flag like this is the retest at the back end of something else, okay, or the retest of the back end of a potential buy structure, the one I just showed you, I always wait for a little bit more deliberacy, so not a 5-minute continuation. And in this instance, I'm waiting specifically for a 3-touch to confirm that we're not part of a bull flag, because if you take a 2-touch down here, okay, so if you do something like that, in my experience, that's when you get tagged in, tagged out, and then we just get some kind of larger bull structure like that, okay? So the 3-touch and the 15-minute continuation is me waiting for a little bit more deliberacy to make sure that I'm not trapped into some kind of larger buy structure, okay? So that's what I'm going to be looking for today, folks. I have an alert set above the area of interest. If that does not tag, then price is likely just messing around up here, and I don't want to be caught up into that, because that's where you'll take a whole bunch of unnecessary losses. So that is the thought process. I believe I just wanted to touch on it. I think there was an entry on dollar CAD yesterday up here. Okay, so there was actually an entry up here, and I missed it, and that was because I was looking at this on my phone, and this looked underdeveloped to me, but there was a trade here. I just want to touch on this ever so slightly. So you could have got, there was a 2-touch up here. What's happened there? I think I've just moved my alert, so let's just put that back. Okay, it doesn't want to move for some reason. There we go. So there was an entry up here. Okay, so I would have waited for, so we had this structure here. I would have waited for the 15-minute candle to close. So I would have waited for that candle to close. That closed at 10 a.m. Okay, so then that would have given me permission to drop down to the 5-minute chart to look for the risk entry within the structure. So after 10 a.m., the first rejection candle that I would have got involved in was here. Okay, so I'd have set my entry like that. Then I would have zoomed out. We would have been tagged in. Okay, I would have waited. Where are we? We would have been managing this on the 1-hour chart. So we would have had the follow through there. And then once we broke this low, I would have set my stop loss about 10 pips above there. Okay, so we got, what's that, 4-1, 3-1 would have been about there. And then in this instance, I would have been tagged out by this green candle here. Okay, so that I would have been out of that trade for about 2.6% profit. But I just wanted to share that with you. And the reason I missed that, as I said, is because I was looking at this on my phone, and I have what do you call it, the battery saver thing on my phone, which makes everything look a little bit darker. And I think that might have been a factor in why I looked at this and thought, no, this looks like it needs a bit more development. Okay, but really, you had the first base, second base, you had this kind of middle section there, push up. So I could have actually taken that, but I was looking at it on my phone. As soon as I got back in the evening to do my evening forecast, it looked pretty clear to me, but not on my phone. So when I'm making these videos, the analysis, I'm breaking them down on a 43-inch TV, which is connected to my laptop. But when I'm checking when my alerts go off during the day, I'm checking them on my phone. So sometimes you can see things a little bit differently. So I'm going to journal that at the weekend as a missed trade. And I'm going to journal the reason is that it looked different on my phone to what it looks like on my 43-inch TV screen. So that might be something to pay attention to. Okay, how you can see things differently on one screen versus another, depending on the size. Okay, and depending on the brightness as well. So all this is why documentation is important. But I hope you've enjoyed this video, folks, and I'll see you again in the next one. And if I do place any trades, well, I'm going to leave that on actually for my mistrade purposes. I'll see you again in the next video. Have a great rest of your day.